Julie Zemelins, 365 Hawaii, and I am here today with Marla and Scott Wynn from Wynn and Egan Team Citywide Home Mortgage. And today we're going to be talking about mortgages and about how it's going to affect you guys in terms of trying to buy your house here on the Big Island. And so I'm going to ask them some questions, and then we're going to open it up to live Q&A. And Eric Zemelis, our wonderful cameraman, is going to read those questions, and these guys are going to help answer them. So, with no further ado, let's get into it. I want you guys to meet this pair because they're our our mortgage partners. Why don't you guys tell them a little bit about yourselves before we jump into the questions? So,
Sure.
Marla?
Okay. Well, Scott and I are part of a larger team. A lot of our team are still located on the mainland. We were blessed to have the opportunity to move here about 2 years ago. We dreamed about it for a decade before that, so many of you might be able to relate to our story. But we got married on Oahu 11 years ago, started vacationing in Hawaii almost every year, and then exclusively to Kona and the Big Island for about the last 5 years because we identified this as like the place we wanted to be. It felt like home. So we're really happy to be here, and we have an amazing team behind us and great family, and just really excited to be in Hawaii.
Yay. And Scott?
And yeah, I'm with her.
Yeah, you mentioned you're from Colorado.
Yes.
Okay, just so that, some people I know they're coming, in fact, there's some people in this group right now that are thinking about coming from Colorado.
Oh yeah,
So-
we're happy to answer questions for people unrelated to mortgage. If you just want to know what it's like relocating here, what it's like for us living here. So you know, we have 4 kids, 2 grandkids, 1 on the way, so we didn't move with no family.
Right.
We've got a lot of obligations back on the mainland, and we still came.
And they have a job.
Yeah.
Okay, so let's start. When we are in this group with a bunch of people, a lot of people say I'm 3, 4, 5 years out. Some people are 6 months out. I usually get the how soon should you actually contact a mortgage broker before you decide to buy a house here in Hawaii. So let's talk about that first.
I'm gonna let you take this one.
Sure. So I think it really just depends on how serious you are about making the purchase. And if you're within, I would say, a year or less, I would say as soon as possible you should talk with a mortgage lender because they can be part of the planning process. They can help you in identifying what price point you can qualify for, also what, if anything, needs to be done. The last thing we want to have happen is you are a year out, you're planning the purchase, you get within just a few months of actually making it happen, then finally reach out to a mortgage lender like ourselves, and we run credit and identify that there was something that popped up that you weren't even aware of, right? And we could have identified that much earlier on in the process and been part of helping you getting that cleared up, or even just improving where you're at, where you are now, to closer when you're ready to purchase. So I would say if you're within a year, as soon as possible, contact a mortgage lender so that you can start to really dig into that a little bit more and have that mortgage advisor help you in the process.
I think also power is in planning, right? And so the more time you have to plan, the better off you're going to be making that move because we can help you plan. And maybe there are some things that they could potentially make some slight changes to in their finances to be better prepared. But if we don't have enough time to execute those plans, it wouldn't come to fruition.
Right.
Just an example of that is like there's credit score tiers as an example, right? So credit score tiers generally are in 20 score increments. So if you're at 680 versus a 700 or 700 versus a 720, there might be breaks on interest rates or different loan programs might open up. And if you're sitting right on the tier of one of those and you could just bump up your score 5 points, that would make a potential difference of just a slight adjustment in interest rate, but can save you thousands over the life of your loan. And we can help you in advising you what the proper steps are. There's a lot of credit suggestions out there on the internet. Unfortunately, many of them may help to improve credit, but don't necessarily improve your chances from the mortgage qualifying side of things. And so we can look at it from both perspectives and give that advice to help you improve the situation, even if you're already well qualified. So.
Even talking a little bit more about credit, credit impacts so many things in our lives, not just your mortgage rates and maybe your mortgage insurance rates, but it's also going to impact your car insurance and your auto insurance rates, and it's going to impact the rates you're going to get on auto financing and credit cards and homeowners insurance. Like everything is impacted by your credit score. So if we can help give advice to help people like make maybe small tweaks that are going to increase their score and put them in a better financial position overall, then we'd love to do that.
And also, those classic cases of don't buy that new Tundra truck right before you buy a house, right?
Yeah,
Yes.
well, those are part of our 10 commandments that we share once we do pre-approvals, because it's really important that people understand now that you're pre-approved, these are the things that you should not do, because you can thwart your own efforts.
From doing that. And speaking of,
Yeah.
that rolls us right back to the next. What's the difference between being pre-qualified and having pre-approval?
So this is a common question, and I think that there is a lot of misconception about the two terms, and I'm glad you asked this question. Pre-qualification is collecting information in an application, running credit, and sometimes running automated underwriting. When we have that information, we can confidently say that if everything in the application is as you say it is, then you're pre-qualified for this payment, which equates to this purchase price, and that goes into a lot more detail that we're probably not going to cover here today. So that's a pre-qualification. If you take it one step further, that's a pre-approval. And that is gathering all the documentation needed to verify everything in the application. And then once we've collected all the documentation, we can confidently say, yes, everything in the application is correct, we've collected all the documentation, and this person is pre-approved.
So, and that means that if you have your pre-approval and you walk into a $700,000 house, you can say to the realtor, I want this house today, and then they can go right into trying to get the loan, and so you can make that escrow
Right,
happen
so when
immediately.
what's interesting now is I've talked to some realtors, and you can weigh in on this too, because you've talked to a lot of realtors too, is that many of the MLS listings are stating that you need to submit your offer with a pre-approval letter, and if you don't submit with a pre-approval letter, it won't be considered. So that's becoming, I think, more common now because the market is moving so fast and so competitive. So it's better to be ready on the front end. And I'm telling you guys, if you think you're going to move in 4 months, if you think you're going to wait to move, once you catch that bug and you get excited, you're going to find the right house and you're going to want to go now. So I wouldn't wait to do that step,
Right.
because it just gives you the confidence and the ability to take action and move on it.
I think a lot of reasons why some people don't go through the full pre-approval process and just want to get the pre-qualification is pre-qualification is easy. You can do a pre-qualification really in a matter of 15 minutes. We can pre-qualify somebody, right? You have a phone conversation with them, you gather enough information, you run a credit report, and you have an educated guess, because that's really what a pre-qualification is an educated guess from our experience that you're going to qualify.
Right.
That's what it means to be pre-qualified,
Because
right?
you've got income, you've got expenses, you've got a credit score, and you think how much money you think you can spend
Right.
on the house.
It's fast, it's easy, and that's why pre-qualification seems simple. Pre-approval seems so much more involved because now there's documentation and such, but we really have had situations where we talk to somebody in the morning and have them pre-approved by that afternoon. So it doesn't have to be a drawn-out, lengthy process that's hard work. And in many cases, the way it works nowadays is you run the loan through a computerized underwriting process, which then tells us what documentation we need. And the more qualified you are in terms of debt and income and credit and assets and things like that, the less documentation is required. And so we can get by sometimes with very minimal pieces of documents that can get a pre-approval very, very quickly.
The other thing to point out too is that, the difference between pre-qual and pre-approval is that that's one of the reasons listing agents are not accepting pre-qualifications, because it is easy, right? Like, it's easy to just go take that simple step. But there's a lot more involved with a pre-approval, not that it has to be difficult, but that it's just doing your due diligence to make sure that that buyer is qualified.
Right, because nothing's worse than being a realtor and you think you're in escrow and then it falls out of escrow because the person really didn't have the money.
Exactly.
Right.
So there's a question here, and James Porter says, what carries more weight with sellers in this market, a pre-approval letter or a cash offer? If it's a letter, what can be done? What can be done to better compete with a cash buyer?
So my perspective with cash buyers is they're great, but they don't have a ton of skin in the game, in my opinion. We always worked with first-time home buyers who needed financing, and that's kind of how we built our business. And I always felt like those offers were sometimes stronger offers than cash offers because those people didn't have another choice. You know what I mean? Like, they fell in love with the house, they wanted the house, they had to get the financing, and they were vested in that house. And I feel like sometimes cash buyers are maybe a little more fickle because they have the cash and they have more opportunities. But you probably would agree that cash offers here probably hold more weight than a pre-approval letter, unfortunately. However,
Because you want to close the deal.
right, we do a lot to separate and stand out in the market. So our pre-approval letters are 3-page pre-approval letters. We state everything that we've done to pre-approve that buyer. We also list all the reasons why they should work with our team because of everything we do during the transaction to communicate with everyone, and we're proactive and we simplify the process. And
how thorough our pre-approval are.
Yeah.
That we know for sure that you're going to be able to close based off of the due diligence that we've done on the front end. And so we've, in many cases, competed with cash offers and have won the seller's approval for accepting the contract over cash offers in some cases.
I think that because most of us haven't had numerous mortgage companies to work for us over the course of our lives, and now that I'm kind of getting a little bit more into this, I can guarantee most people who are watching this don't realize that a mortgage company can make a difference. That you guys are almost like almost from your professionalism and what you're offering, you could actually make a difference versus, let's say, someone who's on a Quicken loan where it's nobody that's actually fighting for the buyer, right? Where you guys, because you're here and you understand how to do this and you set that offer up so good that it actually could make a difference in working with another mortgage company.
well, and also to your point, when you work with an online lender, sometimes you don't have a person to go to, and they're more susceptible to like having overwhelmed pipelines and that kind of stuff. So their turn times might be longer. They might promise something on the front that they can't really fulfill because they know that once you're in the process, it's hard to leave. But we don't push out closings, and I've heard from a lot of people that some of the online lenders do have to push out closings. And it's like, we make things easy for both the agents involved in the transaction and the buyers and the sellers because we're going to meet the deadlines.
Right.
You're going to close when we say we can do it.
And if I can put a little bit into that, when you're moving to Hawaii and you are homeless,
Yeah.
right, when you get here, or you have to have a car or whatever, 3 or 4 or 5, 6, 7 days makes a difference in terms of how much you have to pay. Talk about headaches. What happens if you have pets? The whole thing. So you have to have basically a mortgage company. It's definitely going to close the day that they've already planned out 6 weeks in advance, right?
Right.
So.
And knowing ahead of time how to plan for things like mail out signings, and working that into the overall timeline so that doesn't delay things.
Yeah. So, okay. So, and again, I'm not trying to sell them. They're great. But we've had some instances of some of my referrals where all of a sudden we think that we're going to get our commission check. And then we find out it's been pushed out a week, 2.
Yeah.
And a lot of it has to do with last minute paperwork, which sometimes happens with the financing.
What's
Which goes back to the
yeah.
cash buying experience that maybe sellers say, well, because we've been hearing that the uncertainty in the mortgage market, if someone just handed me cash, I know I'm going to close on time, right? But you guys can basically say, we can close on time too.
Right.
Comes down to reputation, right? I mean, cash has a reputation.
It does.
The reputation in cash is that cash is king and you can
Right,
close
you can
it.
close on time.
And the same is true with a local lender who understands and has a relationship with the local real estate agents. They have come to understand what it's like working with particular lenders like ourselves who have the reputation of following through on what they say they can do and closing on time.
Yep.
So,
So, awesome. Okay, so, speaking of, so a lot of people will go shop rates when they go and find a mortgage broker. And so, speaking of rates, first of all, I've learned a little bit about you can't just shop rates. You really have to go with the service aspect of the mortgage company. But let's talk about rates. How long, or do you think they're going to remain low? What do you guys think about the whole rate experience right now?
Good question.
So, I don't think anybody knows. Nobody really knows what's going to happen, right? I mean, if we were able to predict what was going to happen with interest rates, we'd be able to predict what's going to happen with the stock market, and we probably wouldn't be here having this conversation because I'd be doing something
I'd be in
completely different, right?
Twiggy or we live in an
We'd be
amazing
buying
place.
GameStop shop
Yeah,
stock.
exactly, right? So what's going to happen with interest rates? I mean, my best guess, and that's all it is, and that's all anybody can really say, it's a guess. Even the economists are guessing, is that rates are going to stay fairly low for a little while, right? I mean, we actually subscribe to a service for our clients to anticipate what's going to happen in the market in terms of interest rates. Where are interest rates headed? Either on an hour-by-hour basis, so we can lock somebody in who's already under contract, or longer term, over the next 30, 60, or 90 days. And I will tell you that after subscribing to that service for a lengthy period of time, yes, it's come in handy sometimes, but the majority of the time, they're wrong about 45 to 50% of the time.
It's like leather.
It's like leather.
Weather. It's like
Oh.
the weather. It's like the weather.
Leather is kind of
It's
cool.
like, to be a meteorologist, you really don't have to be right that often, right?
It's going to happen either way. But right now, I mean, you guys, it is historic low interest rates right now. Sure.
Yes.
And we're talking like 2 point something.
Yeah, in the upper twos, depending upon qualifications, type of property, occupancy. Yeah, I mean, it just depends.
Okay, and we've been talking about why the housing market's on fire is because people are getting these low rates, which makes houses more affordable in terms of getting them in the front end, right?
Sure.
So we don't know what's going to happen with the rates, but for right now, they've been holding pretty steady for a very long time, right? Okay. Question.
Next question. Lance says, what amount of down payment for land versus home down payment and condo?
Good question. So because we are the type of lender we are, we can't securitize a mortgage with land, so we don't finance raw land. So if you're looking for raw land, I always recommend people talk to the local banks here because and if you're looking to buy raw land anywhere, I would talk to a local bank in that area because they're familiar with that. But as far as down payment for loan type, it's more based on the type of occupancy than it is on the type of property. So if you're an owner-occupied property, we can get a loan for as little as 3% down if they meet certain criteria, but 5% down is a pretty standard payment. 3.5% for FHA. If they're going to do a second home, then we need 10% down. If it is an investment property, then it's going to be 20 to 25% depending on the property.
And a Condo Tell? That's 30% or something crazy, isn't
Yeah,
it?
Condo Tells are going to be types of loans that we wouldn't do either. So
Yeah.
we're going to be
Oh,
a
that's right.
local type of lender or something that bank that can offer those types of non-traditional products.
Right. And, yeah, there's been some recent changes to Fannie Mae to their guidelines for Condo Tells, and Freddie Mac is getting ready to do the same. And they're looking for those little red flags that show that that's a condo tell, and they're not going to securitize those mortgages.
Oh.
So that's been a little bit of a challenge recently.
So that way, just so you guys, we talked about this, but if you guys are looking at some of the condos here in Kona, some of them are Condo Tells, so make sure you ask your realtor if that's one before you start thinking that might be what you want to do, because you might not be able to get a mortgage on it. We've got what you should know about okay. Okay, so we've kind of hit the questions that we've had. Is there any other questions that people are having in the thing? No? Okay, so how about this one? What are the questions that you get most often when people call you to buy a house here in Kona?
The biggest question I get is just what do I need to do to get pre-approved?
Really?
Yeah, seriously. I mean, I'll call each customer and offer to answer questions up front, like, what's your question? But most just want to know what it takes to get pre-approved. So that process is very simple. It's completing an application, which can be done either online or on a phone call, and that doesn't take very much time. Running credit, running automated underwriting. We talk to the customer, we go through credit, we go through their application, clarify any information, give them a list of documents we need to collect, send them the email of documents. If they send in documents, we do a pre-approval.
Boom.
Boom.
Okay.
James asks, are you a mortgage broker or a lender?
So there are basically 3 types of lenders. Do you want to cover it? You do a
Sure.
really good job.
So 3 types of lenders, as Marla was explaining. So there's bankers. So bankers is what you would expect a banker to be like. It's a Wells Fargo, it's a Chase. You walk into a bank and you can talk to a mortgage loan officer with that bank. So if you do that, obviously if you're walking into Wells Fargo Bank, they're going to offer Wells Fargo mortgages. That's what you would expect, and that's how banks work. Then there are brokers. So brokers are going to be somebody where you go to them and they broker it out. They find 20 different mortgage companies and they identify which one is best for you based on your qualifications. So your unique situation might be a 5% down conventional 30-year fixed mortgage for owner occupying, and they might have a particular lender that they go for that particular situation. Whereas if you're a 30% down investor buyer purchasing a condo, that might be a different broker that they go to because they have better pricing, better interest rates for you as a consumer. So that's what a broker would do. They kind of shop around. So going back to the banker for a second, when you use a banker, what's going to happen is you are going to go to Wells Fargo, you're going to get a Wells Fargo mortgage, it's going to be underwritten by Wells Fargo, you're going to fund with Wells Fargo, and you're probably going to make your payments to Wells Fargo.
And the interest rate is going to be the one offer,
Yes,
the
it's
one
going to
rate
be
they're
one
offering.
Wells Fargo interest rate. The broker, on the other hand, is going to be able to shop it around for you and find the bank that is best for you based on what their knowledge is and experience and the relationships that they have. But when it comes time to underwriting, they're going to have to ship it off to whatever bank that is. So let's say they shipped it off to Chase and got it underwritten with Chase. Then it comes back, they collect the documents, send it back to Chase for final approval, and then Chase funds the loan, and then you make your payments to Chase. So that's kind of how a broker relationship is. So we're somewhere in between. We're what's called a correspondent lender. We kind of work the best of both worlds, in my opinion, and we've I've been in this industry for about 20 years, and I've always worked for correspondent lenders because of this situation. A correspondent lender allows the control that a bank has of underwriting and closing and funding, all of those benefits, because you maintain the control, you can close on time, you can maintain all the dates, provide good communication, and so on. But we also have the ability to shop around just like a broker does. So we have banking relationships with about 30 different banks so that we can shop around and find the best possible deals. So hopefully that answers the question.
Yeah,
But we're
the
correspondent.
biggest difference between the broker and the correspondent is that we have underwriting delegation authority, as Scott said. So our underwriters are underwriting mortgages for that investor. So our dedicated underwriter, who we work with all the time, is looking at all of our files versus sending it out to a bank where, you know, you're going to get somebody different at each different bank.
Right, and you were telling me a little bit about why that could cause delays too.
Well, because you're subject to their turn times then, right? So you don't physically send a file anymore, it's just digital. But once you submit it to the investor to underwrite, now you're subject to their turn times. How full is their pipeline? Which right now with refis, their pipelines are pretty full. So we've heard, you know, a lot of those loans are getting pushed out and it takes longer to get them done.
Which pushes the
right,
closing of your loan,
right.
which pushes you out.
And the broker doesn't have a lot of control over that, right? Because they're just subject to the turn times of that. Whereas because we're a correspondent and we do a large volume at our company, we have a lot of pull, we have a dedicated underwriter. If we have an issue and we're not getting something, we can call a CEO.
Oh, there you go.
You know,
Okay,
I mean,
Okay.
yeah.
So in that, could you, if somebody says, I need to have this house closed in 30 days, not 45, could you get that, if you handle the money yourself, can you make the closing happen quicker?
We can. I will say the one thing that is we don't have control over here are the appraisal turn times.
Okay.
So we typically don't order the appraisal until we're through J1, through the inspection process. If they have a really tight timeline, we probably would order the appraisal ahead of getting through that, just to get in the queue. So there's a chance that they might have to pay for an appraisal, even if they don't end up closing on the property, if they haven't cleared up all the inspection issues. You know, but it's a small risk.
Okay, a couple of questions. One of the questions is, Genesis, what makes a Condo Tell? Which is always a very good one, isn't it?
I can give you the top two things to look for, okay? The first is if you Google the name of the complex, and they have a website that's managed by the HOA that offers rentals, that's a Condo Tell. Basically, the declarations state in their documents that you're required to have your unit, or there are units in that complex that are part of a rental pool. That's a Condo Tell. If there's a front desk that is offering services to everyone who approaches the front desk, that is a Condo Tell. So those are probably the two biggest. But even sometimes we can get past some of those things, like if there's a timeshare, but the timeshare is like grandfathered in and they're not allowing them anymore. That's not a factor. If the declarations state that rentals are 7 days or longer, you know, versus even if it's not a Condo Tell and you don't recognize it as a Condo Tell because it doesn't have like a central listing, but then you read the declarations and it says that owners can rent out for transient purposes for periods of less than 7 days, that's a red flag and we're not going to be able to do it. Like and that's a new change with Fannie Mae, so it's been interesting.
Yes, because we've actually had some friends that have been trying to buy these properties, and then we find out, oh, that's Condo Tell, like Casa and Demco, right? I didn't know that, and also Aston, Kona by the Sea, is so. Also, if you see the word Aston on top of what you're trying to buy,
They have a
usually,
big website.
Yes,
and
I
there's
see
a
that
lot of
now.
rentals on there, yeah. So we actually have. I've started keeping a list of the ones we know for sure are Condo Tells and the ones I know for sure are not. If anybody wants to know one, I'm happy to do the research and I'll add it to my list and then I'll know for future.
There you go.
So James says, are you aware of any special programs which could result in reduced fees or lower interest? Perhaps a Native American buyer, a buyer with desirable credit, job skills, etc.
So the one that comes to mind for me is if you're a VA buyer, if you have VA benefits, then you can get into a home with zero down and sometimes with no funding fee, which is typically a requirement of VA.
You know, do VAs work on every type of house on this whole island?
every house that a typical loan can be done on. So
Okay.
Condo
So
Tells
VA
aren't going to be eligible,
Right, yeah.
things
But
like that.
it's like, you
yeah.
know, like FHA, you have to be like in rural areas or
No,
something?
FHA is not.
US
That's the USDA.
USDA, okay. And do we have FHA loans here?
We
You can do FHA loans here, yeah.
Okay. These are good, also home loan programs is also a very good thing to ask these guys as well.
James also says, what are the general fees for appraisal, title search, attorney opinion, flood certificate, and inspections?
It's not going to be a little involved to answer on something like this. I mean, appraisals generally about $650. That's probably the most straightforward. I can be on all the fees that you had mentioned because the rest of them can vary depending upon property type, the title company involved, and that sort of thing. So I'm not sure exactly how to go into any more depth than
Well,
that
you
at
guys
this
on,
point.
you guys see the closing costs as mortgage people or no?
Yes.
Yeah,
Okay.
we put them together.
Okay, so you're the ones who actually do all that. So that includes the escrow fees and everything
Correct.
else. Is there like a general, like let's say you have a $600,000 house and you have 20% down. Is there like a general, you can tell them what the closing fees are?
No, and that's part of the
Okay,
problem,
'cause
right? So
everything's
there's
different.
there's this rule of thumb that's been out there for years and years talking about how closing costs generally run around 3% of the purchase price.
Okay.
But the problem is that most closing costs are fixed costs, which means that they're not going to vary based off of the price of the home. So as you go much lower in price, the percentage of closing costs goes higher because they're fixed, and as you go higher in price, it goes lower as a percentage. And so that's where it gets very complicated. Because an appraisal on a $1 million house is going to be about $650. An appraisal on a condo at $300 is going to be $650.
Okay.
So that's why, from a
the
percentage
so
perspective,
the
it doesn't
appraisals
necessarily.
don't matter on how big the property is?
It can if you go really high end, or you're looking at like investment properties or something like that. It can be increased, but for the most part, if you're looking at owner occupied or second homes, vacation homes, something like that, generally the cost of the appraisal is going to be the same.
Sometimes location can impact that. If they have to drive somewhere, like if it's in a more remote area, they might charge a little bit more to do that than if it's in like proper.
But that's part of the process. So one of the things, just to express how to get the answer to that question, because I don't want to make it feel like we're eluding the answer, is that you can get the answer very, very quickly once we go through the process. Because once we start eliminating some of the variables, right? And that's what's difficult about answering on a general forum like this, is there's too many variables. I don't know if you're purchasing owner-occupied, second home, investor, condo, what title company, what area of town, all those sorts of things play into this, right? And so as we go through the process, at the time that we issue a pre-approval, we provide an estimate of what those closing costs are.
Okay.
And so again, you could have that within a matter of a day or two, depending upon how quickly you want to move through the process.
Okay.
And it also should be stated too that if you go through the process of getting pre-qualified or pre-approved, it doesn't mean you're on the hook for
No.
anything. You know,
There's
like
no cost.
yeah, we don't charge you anything up front to do that, and if you end up not buying, we're not going to come knock on your door and demand money for the time we spend. I mean, it's just like, it's just a service we provide, and we're happy to do that.
Okay.
James says, I was thinking more along the lines of fixed fees, trying to get an idea of cost to purchase a home in Hawaii versus
Sure.
my area.
I would suggest that maybe we connect offline and provide that information because, again, it depends on too many variables that are going to play into that. But I'm happy to put something together generally so that you have a better idea of what that looks like and you can start planning accordingly.
Right, and so also because I've had a couple of people who've actually used your services, they're so happy because they can do most of it online. That after as we start to wrap this up, I can give them your contact info, and they can do that right from your website.
They can't necessarily, they can apply online,
Yeah,
absolutely.
apply online.
Yep.
Okay.
But I would suggest just having a quick phone conversation because sometimes
Okay.
we can eliminate some of those questions, even just a quick phone call if it's something more general. If they're more serious about getting qualified, then yeah, absolutely, an application would be a great
Yeah.
first step.
Okay.
We're real people, and we're really accessible.
Yeah,
So-
and they really are knowledgeable too. So, okay, so that's a good one for you, James. You might want to talk to Scott offline, but we'll also make sure that we drop the website into the comments so you guys can actually go and apply if you're ready to go see what you guys can qualify for. Is there any other questions? That's it? Okay. So continue to, if you're watching this after the live show is over, if you have other further questions, go ahead and put them in the comments. Marla is part of the group and she can keep an eye on those, or I'll make sure that they get them. And if we get enough questions, we can do another one of these next month. And whatever we can do to help you guys buy a house is what we're trying to do here. And if I can make one more plug too, that we're creating a 365 Ohana group And it's going to include all of our resources and also a weekly email, kind of like a countdown your move to the Big Island. And it's going to include information about pre-qualification and some mortgage information as well. And these guys are helping me launch that. So if that's something that you want to be part of, it includes cool parties at my house, so you can see this great view as well. We're going to hopefully launch that next week. And so just look for 365 Ohana, and it's going to be amazing. So, you have a question?
I got 2 more questions.
2 more questions.
Then we'll finish
Okay.
it up. Lynn Ricker says, say hi. Saying hi to Marla and Scott. You guys did a great job getting me my mortgage and getting it through so quickly. Mahalo nui. Love you guys. And then Renee says, are refinancing costs variable?
Oh, refinance.
Refinances and purchase closing costs are very, very similar. So there's really not a whole lot of difference between the two in terms of closing costs. So are they variable? No, they're mostly fixed as well. The appraisal cost is the appraisal cost. What's nice about refinances is because generally refinances are lower risk loans in terms of how the bank looks at it, because generally there's more equity already built in there. They already have an established idea of what the payment is. They already they're generally going down in payment. There's a lot of things that reduce the risk, and so what happens with that is that when it runs through the computerized underwriting, it can eliminate documentation, but it can also eliminate the need for appraisals. So sometimes you can eliminate like an appraisal cost and just avoid that altogether. Speeds up the process and saves some money.
Well, and one of the things that you always counsel people on when you're doing their refinance analysis too, which he does for free and he's really good at it, is a lot of the costs that you're going to incur in a refinance, you're going to get back from your current mortgage servicer, because if they set up an escrow account for your new loan and you have an escrow account for your old loan, we're going to set up a new one, but then your old lender is going to send you a refund check.
No, there you go. Hey, so speaking of that real quick, because I always like to try and finagle money. If somebody was to refinance their house on the mainland and it lowered their payments enough so that they could actually buy a little bit more over here,
Yes.
then you could still maybe look at them for doing a refinance, because you guys do refinances on the mainland as well.
We
We
do
do.
in a few states, not every state.
Correct.
But yes, that is definitely something. We've had customers do that, refinance their primary into a longer term or at a lower rate, so that then they can afford to buy the house they want to buy here.
Yeah.
Or get cash out
You cash
on their
out,
home
yeah.
on the mainland so that they can use that for a down payment here, something like that. So
Yeah.
lots of options.
So if you
Yeah.
guys,
Yeah.
okay, let's
I was
say if you
gonna
guys want to do that, is obviously talk to these guys, because that's one thing I was asking these guys, the services they offer. They can help you finagle these different opportunities to figure out how we can make it work, that you can move here and
Yeah.
can afford
Tell
to
us
do
what
it.
you want to do, and we'll figure out if we can figure out a way to do it.
Yeah, yeah.
Mortgages
So,
are amazingly customizable. And
Yes.
that's what we help people do, is customize it to work for them. So
yeah, okay. So, yeah, okay, so we're going to wrap it up, and you guys, thanks for joining us, and we appreciate it, and we'll see you on the next one. Aloha.
Bye.